Welcome to Going Public, your gateway when it comes to all the information you need regarding the path to publicly listing your company. On today's show, we have two mavericks in this regard. Mr. Dhammika Pereira, the officer in charge as well as Deputy Director General of the Securities and Exchange Commission of Sri Lanka, as well as its CEO, Mr. Rajiva Bandaranayake. Now, they are two individuals who are at the forefront of this initiative, and they are here on today's show to answer any and all queries that you may have regarding the nitty-gritties of this process. And as always, to take you through the motions, we have with us capital market specialist as well as former director of the SEC, Mr. Vasula Premwardana. Vasula?
Welcome to Going Public. This is the program where we discuss and explore the company's transition from being a privately held company to a publicly listed company. So far, we have listed superstar companies like Odell, Laughs and Hemas. Today we have a very interesting panel of two who I would say are superstars themselves, and in fact I must say rock stars on the capital market. We have Dhammika Pereira, Officer in Charge and Deputy Director General of the Securities Exchange Commission, and Mr. Rajiva Bandaranayake, Chief Executive Officer of the Colombo Stock Exchange. Welcome to Going Public, Dhammika, Rajiva. Dhammika, maybe you can explain the role of the Securities Exchange in the capital market.
Yeah, Vasula, if I start actually with saying that the regulator's role is twofold. One is regulation, as the word goes, and market development. Let's look at the broad objectives of securities regulation. The regulations basically seek to protect the investors, the protection of investors, and also to ensure that the markets are fair, transparent and efficient, and also regulations also seek to reduce the systemic risk. In this context only we have even come up with our mission. Our mission is to promote, develop and maintain a capital market which is fair, efficient, orderly and transparent. Why fair? The capital market should not provide any undue favors to some selected people over the others. There should be a level playing field when it comes to information, trading, decision making, everything. And also there should be fair treatment of orders in a stock exchange, in a capital market. So if your order is getting a preferential treatment over mine, then it's not a fair market. And also there should be a reliable price formation system. All these three, fair, efficient and transparent, basically go hand in glove together, right? And also the market should be efficient. Why efficient? There should be a timely and widespread dissemination of information. Right. Otherwise, what happens is if there is a disparity or information asymmetry in the market, there is no level playing field, right. And all the investors are not in a position, Vasula, to make informed investment decisions. Right. So therefore, the regulator has to make sure that the markets are efficient. And also, on the other hand, when it comes to information, I must say information is money.
Certainly.
Right. In the present world, information is money. So information should be available to everyone.
At the same time.
At the same time. Right. And also the prices basically should reflect information availability. Then only there is a fair and transparent, efficient market. And for a market to become transparent, Vasula, so information should be basically made available to the public on a real-time basis. Maybe with regard to orders, as you know, any investor can look at the screen and gauge the market situation.
Right.
How many orders are there, for what price,
right.
and the quantities, these are pre-order information.
Right.
Such information should be available in the public domain. And when the trading is happening, the statistics should be available on a real-time basis.
Right.
As you very well know, we are also well acquainted with the capital market activities. Anyone can see what's happening actually in the market on a real-time basis. And also post-transaction details, like the details of transactions, also should be available in the public domain.
Right.
So therefore, mainly the regulation seek to ensure that the markets are fair, efficient, and transparent.
Right.
And on the other hand, protection of investors is the main key function of a regulator. That is why, Vasula, we are having the proper enforcement mechanism, and also we are dedicated basically, right, to protect the market and its investors from misleading, manipulative and fraudulent activities.
Right, right.
Fraudulent activities. And we have a proper supervision and surveillance mechanism,
Right.
ongoing,
Right.
real time, and also post event supervision and surveillance, proper law enforcement, to strong investigation procedure, and as you know, the SEC also has taken certain transgressors presently as well as in the past to task.
Right. So basically, what the SEC, the role is to ensure there's a fair playing field, and everything else builds on ensuring this fair playing field. You also have market development role, do you say?
Exactly.
Right.
So when it comes to market development role, so we are active at the moment than ever before. You know, we have come up with the 10 key projects plan, and all 10 key projects are moving forward very smoothly, of course with the able support of the Colombo Stock Exchange and also the entire industry.
Right.
And as you know, right, we have taken initiatives to develop the market infrastructure, to increase investor education, to strengthen regulatory framework. We have come up with a new SEC Act. It's a brand new act,
Right.
which has already been submitted to the Ministry of Finance for necessary action.
Right.
And also to attract foreign funds through various offshore promotions, and also to encourage more and more listings. This is also one of the endeavors
Right.
towards that. And also to increase market liquidity and to protect minority shareholder interests. We recently came up with the related party transaction regulations and things like that, and also to enhance the product portfolio.
Right.
And we have a dedicated team which is basically working on new products, new concepts, and in the near future, Vasula, you will see certain new concepts and products, so that the investors will have more and more avenues to consider when it comes to their investment decisions.
Right.
So it is the proper balance that the regulator should maintain between regulation and market development, and I'm very happy to say that that both these regulation and market development activities are happening and going on in progress very smoothly at the moment.
Yeah, just to come back to Dhammik again, something you said. Of course, you and I, we have seen the market from, I think you were there, from marking it on the board to getting electronic board to what you are talking about. So where do you see the current securities exchange at from perhaps from where you started out at? You are saying the information dissemination part, the efficiency and the fair playing field. How do you see in your personal experience how it has grown?
Vasula, my advent into the share market goes back to 1985, when there was only a board, blackboard, and then we basically turned it to a magic board. right? And there was only one trading floor with one particular trading floor, and we had to basically divide it into three when the activities basically were getting enhanced, intense. At that time, we had a manual transaction process, trading process, and even documentation. I'm proud to say that I was in charge of all these activities at the Colombo Stock Exchange before I joined the SEC. But now, when it comes to information dissemination, infrastructure, Colombo Stock Exchange is one of the best in the region. One of the best in the region.
Let me interrupt you here, Dhammika. Yeah. We have to go for a small break. We will be back with the interesting stories of our interesting and very experienced panelists. Welcome back to Going Public. Today we are talking to Dhammika Perera, the Deputy Director General of the Securities Exchange Commission, and Rajiv Bandaranayake, the CEO of the Colombo Stock Exchange. Both very old and experienced hands at the capital market in Sri Lanka. Dhammika, yes, you were in the midst of telling your
So as
story.
far back as in 80s,
yes,
we had only chalkies, and then lot of documentation, paperwork.
And how many companies were listed during that time?
Less than 100. And there are only 6 stockbroking firms on the floor.
That's right.
To my recollection. And now, the stock exchange then became the first exchange in the South Asia,
to have electronic
South Asian region, to become fully automated. Not only the trading, and even settlement and clearing.
Right.
It's a completely automated system since mid-1994.
Yeah.
Mid-1994. Right. And I must say, compared to the history, we are having excellent infrastructure-wise, regulation-wise. The stock exchange has come up with so many facilities, and also the regulator has come up with the proper balanced regulation over a period of time since 1987, and it's a perfect market.
Right.
And the regulator and also the Colombo Stock Exchange as the operator have done their part. Now it's ready for the players to come and play.
Yes, that's what I wanted to find out, Rajiv. Yes, and we can also go to Rajiv, who's another old hand at the game. And please let us know, Rajiv, what is the role of the Colombo Stock Exchange?
Yeah, was to continue from what Dhammika was saying. I think the exchange has a dual role. On one hand, it provides facilities for companies to come and raise capital, and on the other hand, it provides an avenue for investment to investors. So there's a dual role that we play. So in terms of providing facilities for companies, we have created the platform for companies to access a large pool of investors, both local and international, to raise capital, large amounts of capital, and then also provide them the necessary infrastructure for them to enable the companies to have their shares traded in the secondary market. And in that process, we have enabled the infrastructure for brokers and other intermediaries to participate in the marketplace, and for investors to freely buy and sell shares. So it's this dual role: on one hand providing the companies to come in, and on the other to have the trading facilities, secondary market trading facilities for investors. So basically that's one of the key roles. So to do that, we have a set of regulations. Of course, we operate on the SEC Act, but we have a set of regulations and rules by
the
which
exchange itself has its own set of
rules. For example, we have a set of rules that brokers are governed by. We have a set of rules that listed companies are governed by. So likewise, the central deposit system has its own set of rules. So we provide that infrastructure within that regulated environment where companies can come, access large amounts of capital, and investors can come and invest in the IPOs and then trade those shares in the secondary market in a fair and orderly manner in a regulated marketplace. So the exchange, what it does is to provide automated facilities to enable companies to discover a price for their share, to enable the price discovery mechanism to take place through a regulated market, and for investors to obtain information as regards to the companies on one hand, and the live market prices on a live basis. So the dissemination of live market data also becomes a fairly vital and important area of operations for us, where we provide on one hand the information pertaining to companies, financial information, which enables investors to make decisions, and on the other also the live data and the prices, which enables investors to make very quick investment decisions. And we disseminate this data both locally and international through different channels, through internet, through data vendors, etc. So that's fairly very briefly the role that the exchange has in facilitating this entire process of raising capital and helping companies really to come into the marketplace and use the exchange as a mechanism to list their companies. And
basically it's a place where the capital formulation happens in the economy itself. If you take the summation of all the companies there. So from your experience of going back years, I'm sure 20 odd years I think, from the Nige board days to the electronic board days of where do you see the Colombo Stock Exchange now in 2014?
You see, if you really compare it, if you really want to go back 20 years, I think we have come a long way, both in terms of the on one hand the infrastructure, market infrastructure, and Dhammika elaborated on the kinds of advancement we have made in market infrastructure in terms of providing electronic trading platforms. We have automated central depository. So we are on par with any exchange globally. In
fact,
terms
I think
of
we were the first in South Asia to introduce, like Dhammika mentioned.
In 91, we were the first in South Asia to introduce a depository, and then we went fully automated in 97. So we have on one hand, we have fairly advanced infrastructure to enable investors to trade their shares freely. On the other hand, if you talk of market regulation, I think we have a fairly good set, I would say a balanced set of regulations that enables this process of capital formation and also the secondary trading of securities, both debt and equity. So to that extent, I think we have come a fairly long way in the last in 20 years. And in terms of market size, if you see the market size, I think we are at a new equilibrium right now if you compare ourselves to maybe 10 or even 20 years back, both in terms of where the indices are. It was at 1,000 level, now we are nearly reaching 6,000 in the all share price index. If you talk about volumes, again we have seen a tenfold increase in the number of shares that are traded, in the kind of turnover levels and the volumes. If you look at market intermediaries, we started off with 6 brokers, we have 28 or 29 brokers today. We have other market intermediaries that have come into the market space, for example margin trading providers, we have investment bankers, we have all of those players playing supportive roles also that have come into the marketplace to augment the services that stockbrokers would provide. We have seen better research coming in. We have seen the amount of market data dissemination improving. Now at a instantly data is distributed, you can get it on your Android phone.
You don't have to call the broker on the phone to find out anymore.
Now you have it at your fingertips. You can trade via the internet, you can get it to your phone. You know, all of those facilities have come, enabling probably investors to make better, more informed decisions. So to that extent, Vasu, I think our market has really matured and come of age, as it were. And I think we can compete with any market globally.
So infrastructurally and institutionally, basically, you think both the SEC regulatory framework and the regulatory operation plus the Colombo Stock Exchange in its infrastructure, we are ready. You think in this 2014, looking at 10 years back, 20 years back, the exchange is ready?
We have come a long way. Of course, there's yet to come, and there's more to come. We have set up a clearinghouse. We're working on that. So there are further infrastructure developments.
So how many companies, what have you seen in the growth of listed companies in the market?
If you see in the last 6 or 7 years, we have had about 100 new companies listing, which is a fair growth in terms of any market. So we have seen that more and more companies have started taking this route of going and getting listed for various reasons.
Probably the economy and the fact that our the country has now come under better situation as far as the political uncertainties and the problems we had has been solved, and the market is ready and the exchange is ready and the companies are coming out.
They are.
And from what I gathered from some of the panelists that I've had before in the couple of programs from both people from the Stock Exchange and directors from the Securities Exchange Commission, I also noted a very revived interest and a renewed and a vigorous excitement about them in trying to get companies to get listed in the Colombo Stock Exchange. And in fact, that is why this program is all about. So you believe that the stage is set, the time is right, and now it is time that companies got on board and got themselves listed. Going back to something with Dhammika said, the role of the Colombo Stock Exchange, how does the SEC regulate listed companies?
It's mainly through disclosures and to a certain extent takeovers and mergers, Vasula. So when it comes to disclosures, I must say that it's a myth that the disclosures are draconian or discourage the listings. Just tell me, Vasula, some of the giants, right, are listed. You know, the John Keel's, Commercial Bank, HNB, Carson's, so many. Tell me a single listed company which has gone out of the market due to disclosures. No, disclosures are fairly straightforward. You have to disclose what you ought to disclose. Even as citizens, you and I have to disclose certain things when you go to the bank, right? When you basically go to the tax department, so on and so forth. So the disclosures are fairly straightforward, and we expect the companies to disclose what they ought to disclose to the market.
And Dhammika, let me interrupt you. We will be back again on this very interesting chat in Going Public. Welcome back to Going Public. Dhammika, we were on the disclosures and how companies have not left the market because of the disclosures.
Exactly.
Yes.
And these disclosures, of course, Vasula, would add value to the company. When it comes to the acceptance, when it comes to the corporate governance, internal controls, and also when it comes to the raising of low-cost capital.
Right.
You know, the disclosures would enhance your visibility, your acceptability in the market and in the society. Right. And Rajiv also will agree with me. And these disclosures are fairly simple, possible, straightforward, and also the board of directors of any company, I must say very categorically, is also empowered through the listing rules to even withhold any disclosure. Withhold any disclosure, even if it is of a price-sensitive nature.
Right.
I must say, at this juncture, if you decide actually to withhold any disclosure, my kind request is to maintain proper governance and proper boardroom and corporate ethics.
Precisely.
And preserve confidentiality.
Exactly.
So long as you preserve confidentiality, you can withhold a disclosure if that particular disclosure, in the sense that particular event which needs disclosure is still in a state of flux.
Right.
Or the disclosure would cripple your corporate objectives, corporate actions.
That's right.
You can even...
So if you are in the middle of perhaps negotiating a new market contract or negotiating some event, you withhold the information, but when you disseminate, you have disseminated
the Sri Lanka is a disclosure-based regime. Right. SEC cannot and is not empowered to micromanage companies.
Right.
We can't poke our nose into the day-to-day operations of a company and go and tell the board of directors and the management how to run the business, what to do, what not to do.
Right.
No, it's only disclosures. Right. And when it comes to takeovers and mergers code, if a company, in the sense if a requirement arises to make a takeover offer, so we administer that. So we will come to that later, because there is also a myth that that the listing would basically lead to loss of control
Yes.
which is totally untrue.
That's right.
Totally untrue.
Come back to you, Dhammik, on that. Yes, Rajiva, how you also mentioned the CSE has its own set of rules, the SRO as a SRO, self-regulatory rules. How does the CSE regulate listed companies?
Basically, Vasula, we have a set of listing rules, and that's how listed companies are regulated when they come in initially for IPO and thereafter. So it's a very straightforward set of rules where it deals with even starting from an IPO prospectus to how one would deal with a rights issue to dealing with the subsequent continuing listing requirements like the disclosure requirements that Dhammika spoke about.
Right.
How do you deal with related party transactions, disclosure of public float, etc.
Right.
So a very straightforward set of listing rules, and it's all there, and companies need to only follow the set of rules that have been laid out as listing rules.
Right.
I think continuing from where Dhammika left, really, it's all about governance.
Right.
Good governance, and being listed means you are basically improving your governance practices. And interestingly, I was at a forum recently where on the panel there were 5 large unlisted companies who asked this question about going public, and interestingly they all said they appreciated the fact that the companies they would like better governance practices.
That's right.
So listing really provides the opportunity for companies to practice good governance, and I think the set of rules really embodies this aspect. So in a nutshell, the listing rules all go towards, as Dhammika pointed, it's not merit based, it's disclosure based. So a company has enough space and the freedom and the flexibility to come in and operate without the regulators breathing down their neck.
Right.
So it's a disclosure based requirement. The company directors, for example, will decide as to what they should disclose and not disclose to the market. I mean, they are the people who decide. We don't interfere with the management of the company. We only have asked the companies to disclose any price sensitive information and to share it to the market, because they have obligation to do so, because people buy and sell their shares. Right. So in a sense, I think it's a fairly flexible, easy environment for companies to operate on, because it's a disclosure based environment.
Right. So both the CSE and the SEC is on a disclosure regime, and from what I have understood from the various categories of companies, like I mentioned at the beginning, from Odell to Hemas.
And Vasula, when it comes to disclosures also will ensure the reduction of market abuse, insider trading, market manipulation, and it will provide a fair play.
Certainly. From the regulator's point of view, of course, that is the objective. But I think some of the fears that the companies have, like what Rajiv brought up, is will these disclosures cripple you? And from what I have found out is...
You don't have to disclose your
business secrets, for example.
Business secrets.
Right.
You don't have to disclose any information which would be basically used by your competitors, no?
Certainly. So they actually benefit. The disclosures technically is information. That information allows the company's price discovery in the market to happen properly, and allows perhaps the institutional investors or bigger fundamental investors to come in and hold their share and value their company to a higher price.
All in all, Vasula, the net result of disclosure is basically positive, plus.
And if you talk of competition, if you take certain sectors, and if you compare the companies that are listed versus those that are unlisted, the companies that are listed are in fact doing better.
Right.
But the notion is that if you are listed, you need to make disclosures, which will make your company less competitive, because your competitors are not listed, they don't have to disclose information. But if you analyze some of these sectors, the ones that are listed and do the requisite disclosures are in fact better performing company.
I mean, in fact, we were talking to, I think if I can mention Hemas, ultimately the disclosures is what valued their company 5 to 10 times more, because people not knowing about it can't value it.
Exactly.
So once you get listed and once you inform the public as to exactly how well you are doing and how well your numbers actually are, you are having a better opportunity for people to price your share better. And also in the aftermarket, after the IPO session, the better you do in the company, the better all the shareholders are going to work out. So that we counted on how the SEC and the CSE basically regulates the markets. Anything you all want to add to that other than being discussed? One other question I would have on is, why would a company want to list? I would like to know some detailed benefits from Dhammika or Rajiv. Yes.
Well, I think taking from where you left off about
Valuations.
valuations, I think one primary factor in listing is that it allows companies to unlock the value in the company. It's where you really discover price per share. So you have a company there, you have a certain value in it, but when you really take it to the market and the market prices it, it values it, and there's a market price established, you really unlock the true value of the company. And then you realize that your company is worth much more than what you really thought it to be, whatever valuation that I've given you.
To add to that, Vasula, that also would basically provide an exit mechanism.
Right.
For the promoters, maybe private equity and venture capital parties.
Or even the stakeholders
Stakeholders
itself,
to exit, right, at a proper, fair, price.
Yeah. So quite apart from the fact that you can raise capital, I mean, when a company comes to a certain level, I think your bank funding is not enough to really sustain that level of growth. Your own funding coming from the shareholders may not be sufficient, so you need to reach a marketplace.
So is that the gist of the reason to list?
One primary reason may be raising of capital, obviously, both debt and equity.
Right.
So you optimize your capital structure, for example, you reach a level where you need to go to the market and start raising equity.
Right.
And as I said before, you have a pool of investors, both local and international. And if I may digress for a moment, you look at last 2 years, you see that the foreign investment flow has been fairly significant. We have had about 40 billion last year, 34 billion net inflows for the last 2 years. So you have access to a large pool of long-term strategic institutional investors.
Right.
So you can reach that base, so companies can come and raise that amount of capital. And on the other side, it's a mechanism where you can discover a price for your share. Now certain companies, Dhammika, may not want to raise capital, but they list to discover a price for their shares. And there are very large companies who have not raised a penny on any stock exchange, but listed to establish a market price. And in Sri Lanka too, we have companies that are come and listed to discover price for their share. So you unlock the value of your company.
And also your existence as a listed company would give you the opportunity to return to the market to facilitate your next phase of growth.
Right. Right. So as opposed to going to your cousins and friends and
friends and
you
banks,
can go to the whole public literary.
Yeah, exactly. Right. And also, Vasula, I have not heard much about this particular benefit, the continuity of a business. We have seen more often than not certain companies which have been basically formed by your grandfathers, your fathers, are going into non-existence.
So sustainability.
So, yeah, sustainability of business.
Yeah. In fact, this topic was brought up by another company that went from being a family held to public, and they are very comfortable now. In fact, even bringing in outsiders to manage the company, and they go down the board and actually reap the benefits of the company. So valuation, continuity, and of course good governance. All this comes through listing the company.
And also I think also another factor that I can add to is your ability to attract good quality staff. I think all these businesses are all about people.
Right.
All about
so good
people.
Managerial
I
plus,
think you can attract good quality staff.
And you can reward them with ESOP or share holding things. There's so many benefits that you can touch on. We'll come back to that. It's time for another break, and we'll be back on Going Public shortly. Welcome back to Going Public. Yes, Taji, we are talking about benefits and concerns. Yes, please continue.
We were talking about some other concerns, and I think the fact that company can lose control is one concern that has been highlighted, and I think some companies have this notion that they will lose control. But once again, I think that's more a myth than a reality.
A fact.
Because if you really look at it, if you look at the rules, the requirement for going public is that you need to divest only 25% to the public at
That
the time
is
of
the
listing.
main board.
On the main board.
Yeah.
Right.
And 10%
So even a
on
large
the
company can go to the Dirisawe board.
the main
also.
board. And
Main board, and the other board is
Dirisawe board is only 10%.
10%.
And
if they
even
want to,
the
they can go to 10%.
10%.
Is it?
Yes. You have either Dirisawe board at 10% or
Even on the main board, the initial requirement, Vasula, is to issue 25%. And you have 75% in your hand.
Right.
You only need 50 plus to have absolute control.
Right.
And also the maintenance public float would be 20% only.
Right.
And on the Dirisawe board, it's only 10%.
Right.
Meager.
Right. Right.
Yes.
So that's
So
basically a myth. in the sense
losing
it is not
control
a-
is
yes,
it really
right.
doesn't happen, except that the minor inconveniences of you dealing with a large shareholder base. You need to service them. You need to
Right.
you need
Answer
to
the
service in
questions of
terms
the
of
small shareholders also. Yes.
yes, minority shareholders. You need to have an AGM. You have to meet them. You need to service them by sending them annual reports. So, but the benefits far outweigh the compliance that you need to really undergo as a company.
Right.
So this aspect of losing control really it can be very easily overcome
Right.
by maintaining fair amount of control still over the company.
Right. Right.
And also, Rajiv, I also must, when it comes to the loss of control, I also must talk something about a possible takeover. There's another myth that the company is prone to a future takeover. Takeovers and mergers code imposes certain obligations. If you say as one party or parties acting in concert pass say 30% threshold, that's the first threshold, 30% threshold, that particular party or parties, I mean, they are basically required to make a mandatory offer or a takeover offer. There again, Vasula, when you make a takeover offer to the rest of the shareholders, it is up to the rest of the shareholders to offer the shares or not. So if you are having 51%, 55%, 60%, 70%, just refrain from offering the shares. So there is absolutely no truth in this particular what you call thinking,
Right.
that the company is open actually to a takeover, so long as the balance shareholders refrain from offering the shares to the offeror.
Another concern, Vasula, that some of the companies have mentioned is the fact that are they really able to attract long-term good strategic shareholders through the market. But time and time again, if you look at some of the IPOs that have come in the past, we have had a few this year already for the first quarter. All those issues have been oversubscribed, and they have had good long-term strategic institutional investors coming in.
Right.
So you have a fairly large base of investors that you can tap into, who will be more than willing to come into a company that offers good value to them. So I think once again that concern can be very easily dispelled for the fact that if you look back at the company that are all listed in the past few years, we have seen these strategic investors coming in, and the issues have been taken up. So once again, companies can have that comfort of accessing a fairly large pool of institutional
and an
investors.
option of the different
coming in.
investors that they can actually bring on board.
And also to that, if I can add, if you're looking at private equity, or you're looking at angel investors or promoters who will come into the company, if you have a plan of listing, the venture capitalists and the private equity investors are more likely to get into your company because you have shown them exit route in 3 years or 4 years or whatever. Right. So they are more likely to come into your company because they have exit mechanism, as Dhammika mentioned earlier.
Place.
Yeah.
When it comes to capital formation, Vasula, I have got some figures with me. You know, the year 2013 being a dull year in the market, you know, the total capital raised through the capital market had been 94 billion rupees as against 25 billion in 2012.
Right.
And we have seen during the first 3 months, right, more and more companies getting listed.
Right.
So it's time, actually, I must say.
So obviously what you're seeing is a small trend happening where companies are accessing the capital market for funds, as opposed to perhaps their traditional methods that they have deployed before. Plus, perhaps they are also more hopeful of the future and they have better plans and bigger opportunities, and they are coming to the public to be listed. So, Dhammika, yes, from the SEC's angle, what would you, how have you all facilitated an easier method for companies that don't know anything about going public? How have you all, what have you all done to facilitate easy access to the market?
Yeah, as you know, the awareness is one of the key factors actually in the market. I would say, please pardon me for saying this, although we boast about literacy, the financial literacy in this country is at a very low level. So in an endeavor to enhance the awareness in relation to the financial literacy, the Securities and Exchange Commission, together with the Colombo Stock Exchange, has embarked on an awareness. And also on the top of that, we also introduce the introduction mechanism again into the market.
Yeah.
Introduction mechanism was suspended earlier temporarily because the earlier introduction mechanism had some shortcomings, and after addressing all these shortcomings, now the introduction mechanism is also available as a means of listing. If you don't want to do an IPO, initial public offering, you can come and list your company.
Right.
If you fall within those parameters. So those parameters in relation to the introduction are also not very, very strenuous.
I think very true that it allows companies to, as I said, the price discovery. You list your company as it is. You can take it public for various reasons.
Right.
Your foreign investors may want to list. There may be regulatory reasons for you to list. You might want to discover price for your share. So there are a number of reasons where you would want to list but not have an IPO. And now you have the mechanism to do that.
Right.
And I think going again from where Dhammika left off, I think there has never been such focus on getting companies to list. There's a joint effort by SEC and CSC where we visit companies, we engage them one-to-one, we basically hand-holding for the entire listing process.
I don't think for a long time.
Than ever before. I must actually give credit to the Colombo Stock Exchange, its management and the board also. We are having excellent relationship, Vasula, when it comes to supply or the listed companies or potential listed companies to be listed, or when it comes to regulation, investors, infrastructure, development, whatever.
Right.
The stock exchange and the SEC are together, and our partnership is very fruitful, and it will prove to be more fruitful in future.
In the future. Rajiv, yes, you want to add what the stock exchange is doing towards enlisting more companies to come on board?
Yes, actually there's, as I said, the joint initiative, of course, spearheaded by SEC. We are very supportive regulator. Generally, regulators are
the ones with
not very market friendly, but we have a very supportive regulator in that sense. Where we have a joint program where we conduct a lot of forums for unlisted companies. We visit them and we do educate them on the benefits and their concerns. We have been continuously fine-tuning and refining the listing rules so that we respond to market needs.
Right.
So we have adjusted the regulations, this constant review of the regulations as we go by. We constantly engage investment banks, we get their ideas. We do engage, as I said, the unlisted companies, and to try to encourage these companies to raise equity, not only equity and debt. So there is a fairly organized strategy to try to encourage and increase the number of companies that are going to come on board.
You mentioned something very interesting which I wanted to come to at some point, the debt listing. From the SEC's point of view, I think you all have got tax concessions and
lot of tax concessions
can you talk about that
towards the debt listings, and as a result, I must say the major portion of the capital mobilization in 2013 was due to
debt listing.
Right.
Are the debt being
and it
traded,
was as high as Vasula,
yes.
68.2 billion. in 2013.
And if you look at the secondary trading of debt, for these first 2 months of this year, our volume in secondary debt trading is more than the entire of last year.
Right.
So you can see the growth
coming
momentum in the secondary market in debt, and on our part, we are now developing the infrastructure. We're going to come up with the repo facilities to enable more debt transactions. We are admitting primary dealers into trading of corporate
so finally debt is taking off.
We are expanding our infrastructure and enabling the more efficient trading of secondary debt.
And mind you, Vasula, you can become a listed company through listing of your debt.
Right.
There's no requirement, a need for you
shares.
to list your shares.
Yes. So a company,
through listing
instead
your
of
debt, you can become a listed company.
The actual effect of it is a company can go without listing themselves as a IPO. They, without going to a bank to raise debt, they can actually raise funds in a debt listing of the stock exchange.
Yeah, and also it's not only in the private sector. You have the state sector also listing debt. You have had the largest bank, Bank of Ceylon has listed their debt. UDA has listed their debt. So you have state entities also coming into the marketplace and raising debt through the market. So it's a wide open space for not only the private sector.
Is the awareness of debt listing adequate at this point, do you think?
We're doing a lot of work in that area. We're educating a lot of people, even the state sector, into the facility of coming into the marketplace to raise corporate debt through the market. Yes.
So it's all very interesting, and I think we heard from both Dhammika and Rajiva how to get on board. We heard about benefits, we heard about concerns, we heard about myths and new instruments, and of course what I heard actually was a very good rapport and I think energy, and I'm quite confident that Dhammika said we will see more in the near future. Thank you very much for coming to Going Public, and that's all from us. Thank you.
And there you go, an insightful look into this process from two individuals who are probably the most qualified when it comes to this subject. We hope that today's show has brought you one step closer to this process of publicly listing. We'll see you next week as well with some more successful case studies as well as information you will need when it comes to taking this big step in the future of your company. So until I see you next week at the same time, this is Amaya signing out. Take care.